what we saw was the CPI data really created a situation where the market finally had to take the Fed a bit more seriously. Happy Thursday. Hope everybody enjoyed their Valentine's celebration, or if you're doing it over the upcoming weekend, hope you have a great weekend celebrating. We have a big inflation number surprised the markets pretty significantly here this week. And it's showing that the CPI kind of finally has the market starting to take the Fed a bit more seriously. So we're going to really dive into the inflation numbers here from this week as we get into our update here today. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out some of the noise along the way. And really this week is a huge focus on inflation and obviously the market's reaction to that as well. And really that's where we're going to spend almost all our time today, is talking a little bit about the CPI number that came out on Tuesday. And again, CPI stands for Consumer Price Index, which of course is a measurement of inflation. For those who do tune in pretty frequently, you know that this has been a big topic of focus over the last 2 years and change now. And the reason for that is because inflation has been a big story just in general, given all the challenges and everything going on with all the kind of COVID impacts still remaining in supply chain and money supply and all the above. But that has led to a big focus on the Fed, because the Fed has obviously changed policy in order to try and tame inflation. Now in 2024, the question is, when will the Fed start to reduce their tightening measures if inflation is behind us? And so inflation continues to be on the forefront. As a quick refresher from the last Fed meeting, the reason this is maybe where we want to spend all our time today is because you may remember from the last Fed meeting, they basically suggested every other data point or every other factor that they look at is not insignificant, but much less important. And they were really focused on inflation, and inflation being like the thing that they are watching in terms of how they control policy moving forward. Now, the Fed has been very clear time and time again that they do not plan to cut rates for a little bit further into the year. They will if the data suggests, but that's barely even a conversation at this point quite yet. So although that's been happening, the market has kind of shrugged it off and basically been trying to call the Fed's bluff and suggest that the Fed is going to and more likely to cut rates sooner than they're leading on or saying to be the case. However, given that the focus is on the inflation data points, and really that's the key driver of the Fed policy ahead, obviously inflation carries a lot of weight now moving forward. And so Tuesday, we got consumer price index data out. CPI data came out on the headline number, up 0.3%. And the core number, which again takes out food and energy, and this is really the number that the Fed focuses on the most because it's typically a little less volatile when you don't have some of the energy, fuel prices, things like that kind of baked in there. The core CPI data point was up 0.4%. This puts year over year on core data. So again, taking out food and energy at 3.9, which is obviously still a long shot from the 2% the Fed is targeting. Now, the argument recently has been that if you looked over the more like 6-month period, it's closer to their 2% target. Obviously, this data point even throws that argument off its path a little bit, right? So 3.9% year over year on core CPI, a long ways away from the 2% that the Fed is targeting. And obviously, this was a big surprise as well. This was not something that the market really expected to see. And so we saw a pretty significant pullback on Tuesday as a result of this. Basically, again, I think what we saw was the CPI data really created a situation where the market finally had to take the Fed a bit more seriously. And so on Tuesday, the market pulled back as a sign of that. Bond yields went up again. So bond yields are actually, up near where they were, late last year kind of as well. And here we are on Thursday, and the market has it hasn't rebounded, but it hasn't continued the slide. And so I think it's really interesting. We've been in this situation over the past, let's say 3 months or so, where there's bad news and the market takes it for a day and then just kind of like shrugs it off. So you might remember back in late 2020 or so, 2021, excuse me, we were in this kind of situation as well, where it was like every time there was bad news, people would come in and buy the dips and come in and buy the dips. And eventually that did kind of wear off. Will we see that, as we look ahead? Obviously, it remains to be seen. But if we continue to see inflation data like this, you can expect that the Fed is going to be keep rates higher for much, much longer than the market expects, and we could see a little bit more volatility ahead as a result. So this was a huge data point here this Tuesday. I did want to spend quite a bit of time on this. But to switch gears a little bit, I do want to also touch on retail sales numbers that came out today. So today, retail sales numbers came out for January, and they were down quite a bit. In fact, much more than market expected. So retail sales were down 0.8% for the month of January. Now, to be fair, December was a very good month in retail sales, so maybe a bit of a pause, let's say, after that really strong kind of holiday season. But nonetheless, it was down a lot more than many had expected. So certainly something to kind of continue to watch. And later in the month, we get income and spending data. So that'll be important to see how that lines up with this retail sales data from today as well. All right, we are going to skip our question of the week. We actually have a webinar that we're hosting here this evening. So if you do want to join that, just let me know. We're going to be talking a little bit about some of the impacts of November on the horizon. We're going to talk a little bit about Tax Cuts and Jobs Act sunsetting and some ways to kind of like prepare for what may be on the horizon there. But we will skip our question of the week as a result of that, but be sure to tune in next week. As a quick heads up, Monday markets are closed yet again, so be aware of that. No trading on Monday, but we will be back next Thursday to talk a little bit about the producer price index. So again, another view on inflation. And then next Wednesday, we have the Fed minutes come out as well. So we'll be talking a little bit about what the Fed was kind of seeing under the hood too. Have a great upcoming weekend. We'll see you next Thursday at 3.